think you're seeing a different narrative unfold amongst these banks that maybe the game is over. Survival would mean breaking ranks and covering and getting out. You see one of those European banks do that, and then the whole game just implodes as the price skyrockets and shorts get squeezed and they cover, pushing the price up higher. This is a big deal, and I think it's just beginning right now. So, I mean, if you were to see silver at the end of the year at $96, it would not be crazy at all. And if you take 42.40 and divide by 7, it's going to be somewhere around $600, 605. As insane as that sounds, that would match the geologic footprint right now. So yeah, I think silver is the asset of a generation.
Silver's current trajectory reflects a convergence of technical, geological, and macro-financial conditions that collectively point toward an unprecedented repricing event. When the long-term ratios are applied, such as dividing gold's current level of $4,240 by the historical geological ratio of 7-to-1, the implied valuation for silver approaches $600, 605, a figure that Andy Schectman notes is not speculative fantasy but a reflection of physical scarcity and global extraction realities. Even the conservative technical projection of $96 by year-end aligns with classic chart structures and supply-demand fundamentals. These estimates highlight a broader truth: silver is no longer merely an undervalued commodity but increasingly viewed as the asset of a generation, positioned at the intersection of monetary transformation, industrial expansion, and declining above-ground inventories. At the same time, systemic stress within Western financial institutions is becoming more visible. According to Andy Schectman, price suppression strategies, long defended by large banks through oversized short positions, are beginning to fracture. As physical deliveries surge and liquidity across global exchanges tightens, the sustainability of these leveraged positions is rapidly eroding. The narrative emerging inside major institutions suggests that the game may be reaching a point where coordinated control is no longer feasible. In such an environment, survival becomes the priority, prompting banks to consider breaking ranks in order to unwind their exposure. The moment even one major European bank decides to cover its shorts, the resulting chain reaction could ignite a historic short squeeze, driving silver violently higher as panic covering accelerates across the sector. This looming structural shift marks the early stages of a broader realignment within global markets. The combination of unprecedented physical withdrawals, deteriorating confidence in Western pricing mechanisms, and the gradual recognition of silver's true monetary significance signals a turning point. As Andy Schectman underscores, the dynamics now unfolding are not isolated or temporary. They represent the beginning of a much larger process that may redefine how precious metals are valued for decades to come. In this environment, silver stands not merely as a hedge but as a strategic cornerstone for those seeking resilience in an increasingly unstable monetary landscape. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Is only 2 days, well today's day 3, I don't have the numbers yet, but 2 days into the December delivery month, and there's already been 23,970 gold contracts that have stood for delivery. That's 2.397 million ounces, and plus 8,305 silver contracts, or 41,525,000 troy ounces issued and stopped so far, and the month has just started. It's also relevant to note that in November, which I would say was not normal, the silver deliveries ended the month at just under 20 million ounces, about 19.7 million, which it's really crazy because November is not a scheduled delivery month for either silver or gold. There was 1,267,000 ounces of gold delivered. Issued and stopped is the correct terminology. But you know, the first day, this month, the December contract, day one, we saw 7,330 contracts stand for delivery in silver, which is 36, almost 37 million. That's more than $2 billion worth. And although it's not a record, it's close to it. April was the biggest record of just under 12,000 contracts. But to see a 2-day, you know, that's day one, and 2-day obviously added more, but it's just insanity where there's already been 2.4 million ounces of gold and almost 42 million ounces of silver delivered in 2 days. This is the same type of volume that we've seen all year long. And, it's funny, you and I started talking about this in 2020 before anyone did. And now it's just mainstream mainstream in our business. And I think this will continue until it doesn't, meaning until stuff is just depleted and it's becoming more and more obvious that this is an imminent deal. Well, it's interesting. The technical analysis would say you take the cup and handle, when it breaks through the handle, which it has at over $50, that you take the top of the cup in 1980, which was 50, the bottom of the cup, which was $4 in the 90s, and the difference is 46. You add it to the top, and that would say $96 would be the next technical resistance level, if any, or that would be the projected next place to go. And if you take a 42-to-1 ratio right now, or even call it 45-to-1, where it's averaged for the last 100 years, the silver to gold ratio, even though it's been coming out of the ground for 5,000 years, it's 16-to-1, and now it's 7-to-1, meaning it's depleting in nature. The price ratio, largely because of, in the Western world, gold's role as a monetary metal and silver's role in industry, it's average about 45-to-1. So you take gold today at 42.40 and divide by 45, and what do you get? 42.40 divided by 45 is $95. Well, isn't that interesting? That would be where it would tell you to go, where you take the top minus the bottom, which is 46, add it to the top, that would say $96. So, if you were to see silver at the end of the year at $96, it would not be crazy at all. And if you take 42.40 and divide by 7, it's going to be somewhere around $600, 605. As insane as that sounds, that would match the geologic footprint right now. So yeah, I think silver is the asset of a generation. And I want to always hammer it home. I'm not telling people to buy it to become wealthy. It is wealth. And the biggest money in the world is showing you that. The sovereign wealth funds and the central banks, who have now largely reclassified silver a critical mineral. The U.S. government has. The EU did it in 2023. China just did it, and they are restricting exports. And China, as we've said ad nauseum on your show, the second largest producer in the world, is flying to Peru and Mexico and buying doré and concentrate, paying twice what the rest of the world will, and ship it back to refine it. If they're the second largest producer, then why the hell are they doing that? Because it's worth far more than the currency used to buy it. The prices are wrong. They've never been allowed to reach full price discovery when you have the largest concentrated commodity, concentrated short position of any commodity of the 1,000 plus traded on COMEX for years. It just speaks to the why. Why would it be the largest short position in this tiny little commodity? It's not for these banks to make money, is it? Sure, they do, but is there something bigger behind it? And we've talked about that forever. So yeah, what we're witnessing right now is the inability of the players that have used the Western dominance, which is big checkbooks, big pockets of cash, to continue to suppress the price naked. It's now an existential threat. And you're seeing that. The rumor is the reason they stopped is there's one big trader who took possession and would not roll it over a stamp for cash delivery, perhaps an Asian trader who wanted over 400 million ounces of silver. Give it to me. And so, all of a sudden, the cooling breaks down over Thanksgiving in one of the most thinly traded markets of all. So there's virtually no activity, but just those servers broke down. Right. So the point of it is that this signals, just like the LBMA said, sorry, it's not L plus or T plus 1, it's T plus 8 weeks. Right. We don't have enough manpower or trucks. The Western system is crumbling under their own narrative, and they are losing trust. And that ain't good when a system is completely built on trust and it starts to, as the water recedes, what's the old adage, you see.
Warren Buffett said when the tide goes out, you get to find out who was swimming without swimming trunks. Yeah.
Right. And I think that's going to be a grotesque picture before it's all said and done. And that's why I think you're seeing a different narrative unfold amongst these banks, that maybe the game is over, and survival would mean breaking ranks and covering and getting out. You see one of those European banks do that, and then the whole game just implodes as the price skyrockets, and shorts get squeezed and they cover, pushing the price up higher. this is a big deal, and I think it's just beginning right now.
The current surge in physical deliveries across COMEX is signaling a structural shift that can no longer be dismissed as seasonal fluctuation or technical noise. In just the first 2 days of December, nearly 2.4 million ounces of gold and over 41 million ounces of silver have been issued and stopped, reflecting an unprecedented appetite for physical possession rather than paper rollovers. According to Andy Schectman, this pattern mirrors what has been quietly unfolding since 2020, yet it has now escalated into a mainstream phenomenon within the precious metals sector. The scale of these movements, particularly in non-traditional delivery months like November, highlights a growing realization among institutional participants that the Western pricing system is losing credibility as inventories tighten and settlement timeframes stretch. Furthermore, the technical alignment supporting silver's next major price target adds weight to the argument that the market is approaching a historical repricing event. The classic cup and handle projection, combined with the long-term 45-to-1 gold to silver ratio, places silver's next resistance near $95-96, a level that Andy Schectman suggests is not only plausible but fundamentally justified. With global central banks reclassifying silver as a critical mineral and nations like China aggressively securing supply, despite being one of the world's top producers, the signal is clear: physical silver is increasingly viewed not as a speculative asset, but as intrinsic wealth. As Andy Schectman emphasizes, the pressure on Western institutions to cover outsized short positions could ignite a cascade that propels prices sharply higher, marking the beginning of a generational commodities reset.
Well, I mean, I think it's all intertwined because Bo Hines, who was Trump's crypto advisor until August, is now the CEO of USA Tether, which is already Genius compliant and will get the lion's share of all the stablecoin issuance backed by U.S. Treasuries, which, to your point, gives synthetic demand for the Treasury. But the interest on those coins is not transferable. If you buy something and the stablecoin is created, backed by treasuries, you spend it, the stablecoin gets burned, it's done. But the interest that was generated on the treasury is not transferable to the holder of the stablecoin. It has to be kept by Tether, who then is buying gold. They have almost $13 billion in gold. They were just at the Beaver Creek Mining Summit. So there's a lot to say about the stablecoin in terms of the ultimate benefit to the gold holder, which devalues the dollar, which we've talked about. That's what they want. The debasement trade. You haven't seen mainstream talk about the debasement trade. Makes paying off your debt easier. And we've talked about how they could develop a roadmap to bring back manufacturing. That is a key part of it. The continuation synthetically of demand for the treasury market, which has lost demand and is continuing to lose demand, but that synthetic demand will then be used to take the revenue from it, drive from it, not give it back to us who hold the stable coins, but buy gold with it. And I wouldn't be surprised if there was a wink, wink, nod, nod between Trump and Tether. You're going to give us that metal. You're going to sign a contract discreetly, maybe even through this exchange stabilization fund, and you're going to sell it to us at some point. Maybe. But anyways, I digress. When you talk about what it could have in store for you, yeah, they have AML, KYC, and KYT compliant technology built into the software. Know your client, KYC, AML, anti-money laundering, KYT, know your transaction. They will know who you are, where your money came from, and what you're buying. And you're right, it is a central bank digital currency masquerading as a stablecoin. The big difference is that instead of, it's the CB, there's no central bank. These are independent third-party companies. But isn't it interesting that Trump's CryptoCzar is now the CEO of this new division that is going to issue the USA Tether tokens? Interesting how that plays out. It's just as interesting as Goldman Sachs saying if the Fed loses independence and the market gets whiff of it, gold will go to the moon. Well, who just took the vacated spot? Stephen Mirren, the head or the gentleman who wrote the Mar-a-Lago Accord, Trump's advisor. These things are not by mistake or by accident, they're by design. And so, to your point, yes, it will have, I believe, all of the characteristics of a central bank digital currency only issued by a third-party entity, that the feds will control the on-ramp and the off-ramp. And so it's the same thing in essence. And I think people should be concerned about it for sure, but it is here and it is going to happen. It is the only way that they will achieve, I think, what they're trying to do through devaluation of the dollar and keeping interest rates low. synthetically on both cases, and that devaluation of the dollar will be through the continued increasing purchases of gold and silver with the proceeds behind those stablecoins that are backed by treasuries. The interest on those treasuries not transferable. It's a huge deal, but to the average person, yeah, I think you are just as surveilled as if it were a central bank digital currency. Same way that, well, similar. In Texas, they're kind of leading the charge on this. The idea is you take your American-made coins, you deliver them to a state-run depository. I don't know if it'll be the Texas Bullion Depository or someone different, but in essence, they will give you like a credit card or an app on your phone that you can then make purchases using it in a digital framework. I think the idea of going to a shopkeeper with Gold Eagle is probably not going to happen, but using those coins, which most of the laws specifically say American-made, not all of them, but a lot of them do, held in a vault that you can then keep your purchasing power safe from the continued fall of the dollar in terms of its valuation, down 100% against silver this year, pretty damn well near it after today's run, and 70 plus on gold. Forget about the dollar index. It says it's only down 7 or 8%. It's down 15 times that just about in terms of silver, and 12, 13 times in gold. And so you end up with a situation where you can use money, but it is done in a digital ecosystem, would be my guess. And maybe it's something like we saw recently in Italy where, desperate governments do desperate things. They're saying, tax now or later, any gold, jewelry or coins or bars that people have not declared in terms of, or there's, that no one knows about it, you can tell the Italian government now and pay your taxes now. Who knows what they do? Desperate governments do desperate things. I just think that you have to prepare the best you can, hope for the best, and be prepared for it not to work out that way. And what other choice do we have? I'd rather have options when others have none. But yeah, it is something certainly worth considering. And at that point, the United States loses all credibility as far as I'm concerned, if that ever happened. But look, they are forcing us into this digital surveillance state. Starts with the digital ID. Well, Trump already said that's what he wants, or passed that law for voting integrity, right? What is it? And again, I always butcher these, but Ben Franklin said something to the extent when you give up a freedom in the name of safety, you never get it back, right? Well, that's the freedom we're giving up because of the election integrity. You have to have a digital ID. That's the foray into the surveillance state. The next is the money. No, it's not a central bank digital currency. It's run by third-party entities. Oh, well, then we're safe, right? And you can see how we are quietly dropping the frog into the pot of lukewarm water and slowly turning up the heat. What it appears to me is that is where we are going, and you do the best you can to stay out of it, and everything that you're doing is legal. You got that on your side, and you hope for the best. It's a very small percentage of people that will have that ability. Maybe it's not worth it to rattle the bushes because most people wouldn't know a gold coin if it fell on their...
The evolving intersection of stablecoin technology, treasury-backed digital assets, and accelerating gold accumulation reveals a deeper structural transformation within the global financial system. With regulatory-compliant platforms capturing vast synthetic demand for U.S. debt, and quietly diverting the associated interest into precious metal purchases, the architecture for a controlled, surveillance-based monetary environment is already taking shape. This shift becomes even more evident as states experiment with digital interfaces for sound money storage, while governments worldwide contemplate extreme measures to track or tax undeclared assets. At such a critical turning point, one must ask, how much of this transformation is by design rather than coincidence? Ultimately, the trend suggests a gradual transition toward a fully monitored digital ecosystem, where preserving autonomy requires preparation, prudence, and an understanding of how quickly traditional financial assumptions can be rewritten. If you found this information valuable, make sure to hit like and drop a comment below with your thoughts. Don't forget to subscribe and turn on notifications so you never miss the latest updates. Thanks for watching.